Hey guys, welcome back to another video, and today we're going to be talking about Kirkland or KIRK and where I think the stock might be headed over the next few sessions and what I think we could see unfold in the stock price. So on a short-term basis, the stock's down around 20% today and it's getting absolutely hammered. So I believe actually today is a decent buying opportunity in this name. Shorter term, it's coming to its 38.2% Fibonacci retracement from these lows, which sits right at about 873. Bounced right off that level, and now you have a wick low that you can long against. So I think you could take a long position and put your stop below 852, and that should be a decent risk reward trade. Bigger picture, we're in something called the cup and handle here, so I think it's possible that this is just building out a handle into this long-term trend line that we have from back here. I think it's totally possible we're just building out a handle, and we actually completely wick today and actually break out of this cup and handle and head to the 161.8% extension of this range, which is what you'd usually get after a breakout. So you'd expect to move to that 161.8% extension that sits right at around 1863, and then you have the 138.2% extension sitting at around $16. So the way you could go around trading this is you could take a position here at 960, you'd put your stop below 850, you're risking about $1.10 for potentially around $6 to $8. So you've got about a 6 to 8 risk reward in the trade, which is pretty good. The way I'd go about trading this is I'd take my position here, I would trim half at 16, and I would sell the rest at 1850. I think there's a good chance we see both of these levels up here. I do like this trade a lot. I think there's a good place to put your risk against where there's a lot of previous demand, so I do like this trade, and I think you have a pretty good intraday opportunity here to take a position. So hopping over to the options chain, I wanted to break down another way you could go around trading this, and you could take these $10 September calls instead. You could take these September calls, let's say at 2 in premium, and potentially these could see 8 in premium, and you'd be trimming at around 6 in premium. So this offers a pretty decent risk reward for options. I usually like to find option trades with around 1 to 10 risk rewards, so I personally wouldn't take these. I'd rather take the equity in this case. But I do think for some option traders, this is a great trade you could take, is these $10 calls. Put your risk versus today is low, you're risking maybe 20%, and potentially you can make about 4x here. I think that's a pretty good way to go around trading this as well, is to take the $10 calls here for September. I think it's very possible you see that 161.8% extension before this September 18th expiration. So yeah, anyways, that's kind of my views on Kirkland. I think today is actually a pretty decent buying opportunity if you put your risk versus today is low, and I think we could see as high as $18.50 a share. Anyways, thank you so much for watching, and make sure you subscribe and leave a like.